everyone. So today we're going to break down the latest report card on India's economy as graded by one of the world's top rating agencies, Moody's. We're going to get into the numbers, the strengths, the warnings, and really what it all means.
All right, let's just jump right in and look at the headline number that's really got everyone talking.
And wow, here it is. This is the big story. According to Moody's, India is the fastest growing major economy in the entire G20. I mean, that is a powerful statement right out of the gate. So you gotta ask, right? What's actually powering all this momentum? Let's kind of pop the hood and take a look at the engine. Check this out. Moody's is forecasting a really solid 6.4% GDP growth for the upcoming fiscal year. And get this, that's coming right on the heels of an expected 6.5% for the current year. So this isn't just some one-time fluke. We're talking about sustained, strong performance. And look, this chart really puts it all into perspective, doesn't it? When you see India's projected growth right there next to the average for its G20 peers, yeah, you really get a feel for just how powerful that economic momentum is. So, the Moody's report points to two main things fueling this growth. First up, you've got this really strong, consistent spending from people right there in India. Strong domestic consumption. And second, some key government policies are playing a big role, especially things like simplifying the goods and services tax, or GST. Basically, they've been making the national tax system more efficient for businesses, and that's paying off. And it's not just the main engine that's firing on all cylinders. The fuel system is accelerating too. The banking sector is poised to see loan growth climb to between 11 and 13%. That's a super clear sign that capital is flowing and businesses are actually investing and expanding. Looking at the big picture, Moody's sees the banking system as a huge source of strength. They're highlighting that the bank's assets are really resilient, we've got that accelerating loan growth we just saw, and there's this strong belief that the government has their back if anything were to go wrong.
Okay, so we've looked at the engine. Now let's get to the official grade, the report card, if you will. This is the sovereign credit rating, where Moody's gives its final assessment on the country's overall financial health. So here it is, BA3. Now, we see these kinds of codes all the time, right? But what does it actually mean for a whole country to be rated BA3? Okay, so think of BA3 as a solid investment grade rating. What that means for India is that global investors generally see it as a pretty safe bet, a reliable place to put their money. And that's great because it can lead to lower borrowing costs. But, and there's always a but, that rating also has a little warning light attached. It's signaling that, hey, there are some underlying risks here you really need to be aware of. And that brings us to the most crucial point, really. It's all about this big balancing act. On one side, you have these incredible strengths, a massive, fast-growing economy and stable financing. But on the other side of the scale, you've got some serious fiscal challenges. We're talking about a high government debt load and what's called weak debt affordability. All that really means is that a bigger chunk of the government's money has to go toward paying off its debt compared to other countries. All right, so those are the internal factors, but Moody's is also looking at what's happening on the outside. They're pointing to some potential challenges coming from the rest of the world. You can think of them as global headwinds that could start pushing back against all that forward progress. And check out this quote. It's straight from the report, and it really highlights a key vulnerability. Moody's flat out warns that stopping Russian oil imports could be disruptive. Now, why is that such a big deal? Well, like any massive growing economy, India needs a ton of imported energy to keep its factories running and its transportation moving, which makes its whole economy pretty sensitive to any big shocks in the global energy market. So, just to wrap up the risks, Moody's is really flagging two main external threats. First, the possibility of high U.S. tariffs, which could get in the way of India's long-term goal of becoming a major manufacturing exporter. And second, that critical dependence on foreign energy that we just discussed. And all of this, it brings us to the central question, really, the big conflict at the very heart of India's economic story right now. And it's the final takeaway from this whole report card. So here's the bottom line, the real takeaway. You've got this massive internal strength, this powerful domestic engine, running up against some pretty serious external pressures. And it really just leaves us all with this one critical question. Is that domestic engine strong enough to just power right through these global headwinds? Honestly, that's what everyone is going to be watching very, very closely.